Before we start this video, do like and subscribe to our channel and not miss on any updates.
Now, when we talk about financial statements, we have to follow the Schedule 3 of the Companies Act, and based on that only we'll be preparing the financial statements. Now, in this particular chapter, there are 2 to 3 important points which you need to keep in mind. Number one, format. As far as the format is concerned, it is your responsibility, I would say, to remember the format. Not only now, this format will be required, similar kind of format you will be using when you read CA final also. So format part, you have to remember. Sir, I have not been able to remember properly. I have not been able to remember everything. Keep revising so that you are thorough with the format. Of course, we will have a look at the format now itself and we will see how to remember the format. That is the first thing. Second thing is, what is given in the trial balance? You should be able to segregate between income, expenses, assets, liabilities. Okay, this part you should be able to do, and because you have already cleared CA foundation, you have been learning how to prepare financial statements, trading account, profit and loss account, balance sheet. This part will not be difficult. Now, where a lot of students face difficulty or make mistakes is handling the adjustments. So I will be telling you the tricks to handle these adjustments. If you are able to analyze this TB, do these adjustments properly, remember the format, I can guarantee 10 to 12 marks easily, even if you make a couple of adjustment mistakes. Okay, so that is my guarantee. How to follow, how to read, how to understand the position is what we'll be taking up first. Then we'll go to the format of the financial statements, and then we'll go to some specific points related to classification, disclosures and all of that. Then we will do the questions on financial statements. A couple of questions I'll tell you how to approach, and then we'll handle other aspects related to dividends and all. Right? Now, in any examination, when there is a requirement to prepare financial statements, they will give you trial balance. This trial balance will majorly have items related to income, expenses, assets, liabilities, and equity. So first objective or first task is to appropriately classify the items as per these heads, right? Now, they will, when they give you a trial balance, let us say 100, 80, let us say 200 here, 120 here, okay, and 100 here. This is a tallied trial balance. From a tallied trial balance, your P&L and your balance sheet, finally, when what is the objective, the balance sheet will always tally. Even if you make a mistake in classification and adjustment, your balance sheet will always tally because the trial balance has tallied. That is the first thing. Now, the way you should approach a question in the examination is, for example, there is an item of income. Let us say, oh, I put it, let this be expense, let this be income, okay? Or, yeah, let this be income. Income is 80, expense is, for example, 100. Now, this income, for example, is related to sale. Income is related to sale. I think it's getting slightly, clumsy. I'll redo it. You all should correct me if I'm making these, silly mistakes. Let us say you have a trial balance where you have income of 100, expenses of 80, assets of 120, liabilities of, let us say, 50, equity will be 50. The moment you get this trial balance, what you should first thing do is classify all the items. Okay, in your mind itself, mental classification is also sufficient. Now, income, let us say this income is sale. Where will I take this sale to? I will take this sale to P&L under revenue. Correct. The moment I have taken this to revenue, what I will do is, you can use a pencil to put a small tick mark here to indicate that you have already done the adjustment or you have already posted. First thing, okay. Same way you post the expense, you post assets, you post liabilities. Whenever you post these items, put a small tick. What this will do is, it will ensure that you have not missed out a single item in the trial balance. Then comes adjustment. For example, adjustment of closing stock. Closing stock, let us say they have told it is 20. Now this closing stock has two impact. Always remember, anything which is given in adjustment has two impact. Two impact meaning either once in P&L and in balance sheet, or maybe both the times in balance sheet, or maybe both the times in P&L. But 90% of the time what you get is closing stock. Once you will have an impact in P&L, second you have to show it in the balance sheet. So for adjustments, once you post it in the P&L, put one tick. Once you post it in the balance sheet, put another tick. So this will ensure that you have taken care of all the adjustments. Okay. After you put the numbers properly, spread the numbers properly in the financial statements, your work will be done. It will definitely tally even if you do computation mistakes. For example, in depreciation is 10%. Depreciation has to be posted at two places. One, P&L, second in the balance sheet as a reduction from fixed asset. So even if you compute 5% instead of 10%, your balance sheet will tally. That should not be the problem. Your objective is to properly classify the items and take it to the respective financial statement. Now, when there is a question on financial statement, what I would normally tell the students, or what I would normally prefer to do in the exam is one full page should be your balance sheet, or if you want you can do first P&L also. One full page should be, so one is balance sheet, one full page should be P&L. Okay, if required, if you want to, you can give 1.5 page for P&L also. That is also perfectly fine. Okay, what you can do, 1.5 page for balance sheet, 1.5 page for P&L, depending on how many, how much of spacing do you need as per your practice. So when you solve a question, take one actual exam question and see, can I fit this balance sheet in one page? If you feel no, I cannot fit this in one page, fit it in 1.5 page. 1.5 page for balance sheet, 1.5 page for P&L. After that, draw your schedules or notes. Okay. For notes, you will have 1 page or 2 page. You can leave 2 page should be sufficient, followed by working notes. Now, if you feel that working notes, if you want to do first, you can do working notes first as well. Then, the moment you see the item in the financial statement as sale, go to P&L, record under revenue. Of course, you will, if required, you have to fill the notes to accounts as well. So as you take the numbers from the trial balance, pick up the number, put it in the respective P&L item. If notes to accounts are required, put it in the notes item as well. And you can do it in the, for the balance sheet also same way. For example, if you have assets, okay. Now for these assets, definitely we will need a schedule, right? So for that, you can prepare a schedule separately as you do the question, okay. Now, marks in the examination, what happens is, generally, if it is a 14-mark question, generally balance sheet will have 4 to 5 marks. P&L will account for 5 to 6 marks, and your working notes and all will account for about 4 marks. Okay, depending on the number of adjustments and all which are given in the question. Okay. Any questions so far in whatever we have discussed? Okay. Now, whenever we do revision questions, or whenever you will be practicing questions, you will follow this framework so that you don't miss it. And marks, the way marks are given in this particular type of question in the exam is, for every, I'm just giving an example, 2 correct or 3 correct entries. Entries here means amounts. You will get 1 mark. So tell me, even if you are able to do 60% or 70% right, can we not score these marks? We definitely can score these marks. So from our side, we need to know the format, we need to know which amount goes where, and we need to be able to put the amounts correctly. A lot of students have this presumption that just by preparing the format we will get marks. You will not get marks. Amounts have to be written, only then you will get the marks. So take the trial balance, start putting respective amounts in the respective places in the P&L and in the balance sheet, and also in the notes and working notes if at all it is required. Unless the question says notes are not required, that is notes to accounts or notes to final accounts are not required, you will prepare the notes also. Not for all the items, for items where direct breakup is not available, that also when we see the questions we will be able to understand that, right? Now, having understood this, a quick recap of how the notes and the financial statements are prepared. This is the format of the balance sheet. Okay. Now one more. Previous year number, this is not required unless the question has it, and generally this is not tested. First. Second, if for example the question does not have anything like money received against share warrants, no need to write this item. Okay. Share application, money pending allotment, if this is not given, no need to write that item. Only items which are relevant, that is what you will write. That is one thing you have to keep in mind. So now, in the balance sheet, you will start with equity and liabilities. First item, shareholders fund, which has share capital and reserves and surplus. This mandatorily should have notes, unless the question says notes are not required. Share capital, you will prepare a notes where you will disclose authorized, issued, and your paid up capital to the extent information is available. Reserves and surplus, you will give a breakup of P&L, securities premium, capital reserves, capital redemption reserve, debenture redemption reserve, what all reserves are there. For this compulsorily you will have notes. Okay. Then non-current liabilities, long-term borrowings. If you directly have a single amount in the balance sheet, trial balance, you don't need notes, otherwise notes may be required. Deferred tax liability, notes are not required. Other long-term liabilities, if at all there is something given in the question, but most of the questions that I have seen also in the exams, you will generally have only long-term and deferred tax. Sometimes you may have these two items, otherwise you will not have. Then current liabilities, you have short-term borrowings, trade payables. Now, if this information is given in the question, that is outstanding dues of micro and small enterprises, if that is given, then you have to break up between total dues of micro and total dues other than micro and small enterprise. MSME outstanding, what we call. Okay. Now, if this information is given, then you need to disclose. If the information is not given, no need to write this breakup. Then you have current liabilities and short-term provisions. Okay. So anything other than trade payables and borrowings, you will fit it under other current liabilities. If this amount is directly given in the trial balance, no need of schedule notes. Then coming to assets, non-current assets, property, plant and equipment, what we learn in Accounting Standard 10, intangible assets, Accounting Standard 26, CWIT, intangible assets under development, if information is given in the question. Then non-current investment, if information is available, deferred tax asset, long-term advances, other non-current asset. If deferred tax asset and deferred tax liabilities are given, you will net them off and put it as a single item. Also remember, deferred tax liabilities and deferred tax asset are always classified as non-current in nature. Then you have current assets. Basically, you'll have inventories, trade receivables, cash and cash equivalents, other current assets. Okay, so this is the format which you have to remember, which you have to compulsorily remember. Now, there is a requirement of rounding off. There is a requirement of rounding off given by the Companies Act. This is important for MCQs. In the examination question, they have not yet, asked us to do it, in a rounded off format. So you can take the total amount as given in the trial balance, because rounding off sometimes can be difficult. If you are comfortable in rounding off, you prefer to round it off to thousands or lakhs. So if the total income is less than 100 crore rupees, you can round it off to thousands or lakhs. This is more comfortable. Don't round off to 100 or millions. That is slightly tricky because we are not used to. So rounding off means if it is given as 10,000 in the balance sheet or in the trial balance, you will only take 10. You will write in thousands or in lakhs. Generally also you can do it to save time, but only if you are comfortable. Okay. So this is the rounding off. For MCQ, definitely this is an important part. Now, classification between current and non-current. This is important as far as the definition is concerned. In the previous exam, actually, they had asked a 2 marks question, very simple one, non-current asset held for sale. Okay, so whether it should be current or non-current, that is what they have asked. An asset shall be classified as current. When will we classify? When it is expected to be realized or is intended for sale or consumption in the company's normal operating cycle. Now, what is this operating cycle? Operating cycle basically is the time from when you purchase the raw material, convert that into finished goods, sell the goods, and realize from debtors. Average time. So, for example, you purchased raw material, you have kept it in your warehouse for 30 days to manufacture the finished goods. The finished good itself is kept another for 45 days before you sell. When you sell, you give customer the credit period of 90 days. So the operating cycle is 90 plus 45 plus 30, 165 days. If it is assumed that it is expected to be realized or is intended for sale or consumption in the company's normal operating cycle. So something in the normal operating cycle is current. There is one more thing. If something is to be realized within 12 months, even that is also current. So you will check either operating cycle or 12 months. So the answer should be, if something will be realized within 12 months, it is always current. And if something will be realized within the operating cycle, that will also be current. So sometimes what happens is, operating cycle may be, let us say, 2 years. So up to 2 years, you will consider it to be current asset, whichever is higher. So you can learn this as operating cycle or 12 months, whichever is higher. Generally, trade receivables, trade payables are classified as current because they form a part of the normal operating cycle. Okay, so first thing is within the operating cycle. Second, it is held for the purpose of being traded, means purchase and sale. It is expected to be realized within 12 months. Already we have seen 12 months from the reporting date, from the balance date. It is cash or cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting date. What does this mean? Cash and cash equivalents are always current except if there is a restriction. So what could be the restriction? Maybe I have a foreign subsidiary or a foreign branch. As per the rules of that country, I cannot take cash, I cannot bring the cash back to my country till the time I wind up the operations. So there is some restriction. Okay, so unrestricted cash and cash equivalent is always current. So what are the current things? Within the operating cycle, within 12 months, trading items, cash and cash equivalents. Okay, other than this, all other are classified as non-current. You will assume, if nothing is available, assumption of 12 months will be done for operating cycle. So for us, it will be operating cycle or 12 months, whichever is greater. Same conditions are for liability. If it is expected to be settled in the normal operating cycle, it is held primarily for the purpose of being traded. This is slightly advanced concept, no need to worry about it. This is more a final level concept. It is due to be settled within 12 months. The company does not have an unconditional right to defer the settlement for at least 12 months after the reporting date. Now the third category, basically what it means is, I cannot defer it within beyond 12 months. I have to pay it within 12 months, then it will be classified as current. All other liabilities are classified as non-current. Trade receivable is the amount due on account of goods sold or services rendered, and a trade payable is on account of goods purchases or services rendered. Okay. Now this is the general classification. Then, as far as share capital is concerned, you will disclose authorized, issued, subscribed, and paid up, and par value. So this is generally what will be required for the examination. Now, sir, if authorized capital is not given, can we assume? No need to assume. You can just say authorized, issued, subscribed, and paid up in a single line. So you will write it as authorized share capital 10,000 equity shares of 10 each. This much is sufficient. Okay. Then this is a disclosure requirement. You can have a reference to it as an MCQ question. If the shares in the company which is held by each shareholder holding more than 5% of shares, specifying the number of shares. So if a shareholder holds more than 5% of shares, you will make that disclosures. Aggregate number and class of shares allotted as fully paid up pursuant to contracts without payment being received in cash. This is your bonus shares. This bonus shares you will disclose for a period of 5 years. Aggregate number allotted as fully paid up by way of bonus share. Aggregate number of shares, number and class of shares bought back. So if there is buyback, we have a different chapter there. Bonus share, this is not the bonus one. Without payment being received in cash. So this is more about, let us say, purchase of PPE. We purchased PPE, we issued shares. Okay. So payment is not received in cash. We'll disclose that. Bonus shares, we'll disclose that. Bought back shares, we'll disclose that for a period of 5 years. Means within the previous 5 years, if there has been any bonus issue, non-cash issue, and if there has been a buyback of shares, it will be disclosed. A company shall disclose shareholding of the promoters, promoter name, number of shares, percentage of total shares, percentage change during the year. So this also has to be disclosed. Okay, this much thing, if you remember, it is more than sufficient. Any question here? Sir, can we leave some extra space between current asset liability while preparing financial statements? Yeah, you can leave a space. See, one thing, guys and girls, of course, you have paid the exam fees. Okay, if you have paid the exam fees, take as many additional sheets you want, leave as many space as you want. Don't worry about environment, because saving of 2 papers will not save the environment at this stage. If you want to take care of environment, you can do it subsequently also, or at other places also. So, and I have seen this problem with a lot of students. Okay, the problem is, so generally what happens is, this is the margin. Okay, this is the margin which is given in the paper. Students write here also. Even here in the bottom of the page, they will do some scribbling, and the examiner it becomes a headache. So don't be greedy, or don't be miser, I would say, rather, in asking for additional sheets. If you want, take additional sheets. Leave sufficient space. Leave sufficient space so that it is clear for the examiner. So what the examiner is doing is, examiner is searching for the numbers. Now you write something here, somewhere here in the corner, you will write 9,000, something like this. You will cut it again, you will write. Don't do that. And if at all there is a mistake, for example, I made a mistake, right? Sometime back, I wrote sale on the credit side. So if you make any mistake like that, what you have to do is, let us say the number is 10,000. Actually, the number should have been 20,000 or 50,000. Don't do this. What you do is, 10,000 you have written incorrectly, cut it off, write 50,000. Only one strike. Don't try to overwrite and all of that. Just one simple stroke and write the correct number above that. You will get marks. If you try to scribble for this, how will I understand? How will the examiner understand what you are trying to write here? And then we don't get marks. So the idea is single strike, right on the top. Single strike. Sir, can you use whitener and all? If you have time, you can use whitener, but I think that will take a lot of time when you are solving questions. So best thing, simple strike off and do it on the top. No, we make silly errors. I am not saying no. I have made silly errors. CA final, accounting standard 14. After solving the entire question, I realized that I calculated the purchase consideration incorrectly. It was luck, I think, where I went back and I checked the question. I have this habit. Means after solving the question, I'll spend 2 minutes in reviewing the question. So I calculated the purchase consideration incorrect. Now think, purchase consideration is incorrect. Means goodwill is also incorrect. Means my balance sheet also incorrect. So I have to change. Now one choice is strike off everything and redo. I didn't have the time. So what did I do? Purchase consideration, wherever it was incorrect, I did a strike off and I wrote the number. Goodwill calculation, again, 1 strike, 2 strike, wrote the correct number. Okay. How to select question? This chapter makes more time. Now, oops. Just a moment, the screen went off. I don't know why. See, now this chapter takes more time. Definitely yes, in solving questions in the examination. If it is a 14-mark question in the examination, you will take easily 30 minutes to solve. Okay, you will take easily 30 minutes to solve. But the advantage of this particular chapter is, by spending 30 minutes, you are assured of 10 marks. By spending 30 minutes, you are assured of 10 marks if you do it correctly. Okay, and even consolidation questions are long, amalgamation questions are long, right? So this is one question why I suggest students to do is, by spending 10 minutes extra, if you are assured of this 10 marks, it will add a lot to your confidence. So how to do it faster? Practice. See how to pick numbers and plot it in the exams. Have formats ready. So with that strategy, when you approach, you'll be able to do it. Okay. Then you have long-term borrowings where you will show bond, debentures, term loan from bank, other parties, other deposits, loan and advances from related parties, finance lease obligation, etc. Then you will classify them as secured and unsecured. So borrowings, secured and unsecured. Then if the loans have been guaranteed by directors, that has to be disclosed, simply not tested. You can just leave it. Okay. Then if there is any continuing default as on the balance sheet date, you have to disclose. Again, not very important. Then you have other long-term liabilities which are other than what you have put it under current liabilities. Long-term provisions, again, which is given as long-term provision. Short-term borrowings, again you have loans, related parties, same stuff. One thing is, this is very important, current maturity of long-term borrowing shall be disclosed separately under short-term borrowings. Now what is the meaning of this? Okay, generally what happens is, let us say I have 10 lakh of borrowings. Okay, I have 10 lakh of borrowing. On this interest, I have to pay, let us say, 9%. So, interest amount is 90,000. Okay, and I have to pay every year 1 lakh. So, closing balance will be 10 lakhs plus 90,000. 10 lakh 90,000 minus 1 lakh will be, I have to pay, let us say, 4 lakhs. It is slightly easy. So it becomes 10 plus 90, 10 lakh 90 minus 4 lakhs, 6 lakhs 90,000. Then this is year 1. In year 2, 6 lakh 90,000 into, I have to pay interest of, let us say, again 9%. So I'll take it as 10% for easy calculation. Okay, 10%. So this becomes 1 lakh and this becomes 7 lakhs. Here 7 lakhs into 10% is 70,000, and again I have to pay, let us say, 4 lakhs. So closing balance is opening balance plus interest minus payment. This is 7 lakh 70,000 minus 4 lakh, 3 lakhs 70,000. Okay. Now what you have to understand is, any loan, any lease liability, it has 10 lakhs of outstanding. This loan is, let us say, 4 years loan. It is a long-term loan, but if you see, closing balance at the end of year 1 is 7 lakhs. Closing balance at the end of year 2 is 3 lakh 70,000. Means out of 7 lakhs, I have paid, if I do minus 3 lakh 70,000, out of 7 lakhs, 7 minus 370, it is 3 lakhs 30,000. Out of 7 lakhs, I have paid 3 lakh 30,000 in the next year. That is how you have to understand. So basically, closing balance at end of year 2 minus closing balance at end of year 1 is equal to current liability. This is one thing you have to keep in mind. This is applicable in leases also. So if my closing balance at the end of year 1 is 7 lakh, at the end of year 2 is 3 lakh 70,000, means I have paid 3 lakh 30,000 in the second year. This 3 lakh 30,000 has to be classified as current liability. That is what is the meaning of current maturities of long-term borrowings. So I have a long-term loan. But in that long-term loan, in the next year, how much principal I have to repay, that is called current maturities of long-term borrowings. That has to be disclosed separately. Okay, this is very important. Then you have trade payables related disclosures related to micro, small and medium enterprises. You can read it once. Don't try to waste too much of time in understanding this. Then here you need a aging schedule. This can be asked. Aging schedule of different categories: MSME, others, disputed MSME, disputed dues, and others. Less than 1 year, 1 to 2 years, 2 to 3, more than 3 total. So how much period is it is outstanding for? That has to be disclosed. Meaning to say, what is the amount due to MSME? What is the amount due to others? So this is one category. Then breakup of how much is disputed, how much is undisputed. Disputed means there is a dispute between you and the other party. So how much is the disputed payable, that you have to segregate separately, and balance will fall under others. So for example, due to MSME 100, others 200, total is 300. Out of this, MSME dues which are disputed is 40, others disputed due is, let us say, 50. So 50 plus 40, 90. 300 minus 90, 210 is undisputed. This basically represents undisputed. So two categories: due to MSME, others, disputed and undisputed. This aging schedule has to be given. Then other current liabilities: Current maturities of finance lease obligation, interest accrued but not due, interest accrued and due. Interest accrued and not due means interest has accrued but due date is later. Due date is later. Interest accrued and due means accrual also has happened, due date has also passed by. Income received in advance, if at all there is any unpaid dividends, and application money received for allotment and due for refund and interest accrued thereon. So this basically means if you have received application money which has to be refunded, that you need to disclose here. Okay, please keep in mind, share application money pending allotment is given here. Share application money pending allotment is given here. If I have to refund, if there is any amount refundable, that is kept under current liabilities. I think this part we missed. Reserves and surplus, your all capital reserves, your capital redemption reserves, securities premium account, debenture redemption reserve, revaluation reserve, share options outstanding account. This happens when there is a employee stock option. It is no longer a part of your syllabus. Okay, you'll learn this in final level, but this is also there. Other reserves, if there are any other reserves, and surplus balance in P&L. All of these have to be shown under reserves and surplus. Then short-term provisions for employee benefits and others. So this is a standard thing, nothing complicated. Now coming to PPE, classification will be given as land, buildings, plant and equipment, furniture, vehicle, office equipment, others. Generally in the examination they will not give a breakup. If at all there is a breakup, you will prepare a schedule, you will prepare a note for the schedule and you will give the breakup of this. Assets under lease shall be separately specified under each class of asset. So if you have taken something on lease, you will disclose that separately. Then this is more important for MCQs. Reconciliation of gross and net carrying amount of each class of asset at the beginning and at the end of the reporting period. So basically what it means is, for gross block you have to show what is the opening balance, what is the addition, what is the deletion and what is the closing balance. For depreciation, what is the opening balance, what is the addition to depreciation, what is the deletion from depreciation, what is the closing balance. And for the net block, what is the opening balance, addition, deletion, closing balance. This is called reconciliation. You have to prepare it in a statement format and present it. Now in the examination, for our case, you will generally have only the gross block and depreciation. So you will show gross block less depreciation, the net amount. Okay. If there are any revaluation of asset, details of what is the amount of revaluation, that has to be disclosed separately. Then intangible asset, you will give the classification as goodwill, trademarks, computer software, mastheads and publishing title. This is more for publishing companies, newspaper titles and others, mining rights, copyrights, etc. Again, reconciliation has to be given, revaluation surplus has to be mentioned. Then non-current investment, generally not given in the question, but if at all it is given, you have to give this classification. Investment property, this is land and building, which you will understand in accounting standard 13. Then equity instruments, preference shares, government and trust securities, debentures, mutual fund, etc. has to be given separately. Investment carried at other than at cost should be separately stated, specifying the basis of valuation. So we have, right, for current for investment, if there is a permanent diminution in the value of investment, we will write it down to the net realizable value. That has to be disclosed here. Then aggregate amount of quoted investment and market value, aggregate amount of unquoted investment and provision for diminution. So here quoted investment means investments which are listed on stock exchanges. So for example, if the company has Reliance Industries shares, so what you will do, the value, what is the amount of quoted investment, the carrying amount as per books, and what is the market value as per the closing price, you will disclose. Then if there are any unquoted investment, what is the total amount of unquoted investment, that will be disclosed. Long-term loans and advances. So sometimes students get confused between, so if there is loans and advances, should we take it as a liability or an asset? Whatever it is, if it is loans and advances, it is assumed it has been made by the company. Okay. So advances given for capital, for related parties, other loans and advances. Then classify as secured, unsecured, doubtful, separate classification is needed. And if there are any bad and doubtful loans and advances, you will disclose separately. Then other non-current asset, if there are any long-term trade receivables, security deposits, any other, other long-term current asset, and you'll classify them as secured, unsecured, doubtful. Bad debt has to be provided separately. Aging has to be given. Now aging here, similar to the aging that we learned under trade payables, here also you have to give aging less than 6 months, 6 months to 1 year, 1 to 2, 2 to 3, more than 3 years. So here also you'll have undisputed considered good, undisputed considered doubtful. Means undisputed considered good means me and the customer, we don't have any dispute. I have supplied the goods, services, the customer has accepted. Okay. Undisputed receivables considered doubtful means where I have created a provision for bad debt. Disputed considered good. So I am in dispute with the customer, but I am sure that I will realize the money. Disputed considered doubtful. There is a dispute with the customer, and there is a doubt that we will not be able to collect the full amount. Then we have current investment. Okay, so if you remember, non-current investment, property. So investment in property is generally considered to be non-current. Then other investments, same like what we saw under current investment. Then inventories, disclosures as per AS2, similar to this, raw material, WIP, finished goods, stock in trade, stores, loose tools, others. Trade receivables, again same, undisputed good, undisputed doubtful, disputed good, disputed doubtful. And what is the period outstanding? Okay, now you must think, sir, if it is outstanding for more than 3 years, why are we classifying it as current? The thing is, our expectation is that it has to be settled within the normal operating cycle. Okay, hence it can be more than 3 years also. Then you will show what is secured, unsecured, and doubtful portion. Bad and doubtful debts provision should be shown separately. Then cash and cash equivalents, if breakup is available, cash balance with bank, checks on hand, cash on hand, others. Then if there are earmarked balances with banks, earmark means we have kept it for a specific purpose, you have to show it separately. Balance with banks to the extent held as margin money or security against the borrowings, guarantees, or other commitments to be disclosed separately. So sometimes what happens is, I go to a bank and I take a bank guarantee. Bank says you put so much of amount in fixed deposit against this bank guarantee. So that has to be disclosed separately. If there are any repatriation restriction, I have a foreign branch, I cannot take the money back. That I have to disclose separately. And bank deposits with more than 12 months maturity shall be disclosed separately. Short-term loans and advances, if there are any, you will disclose, and other current assets. Then this has been generally given as a hidden adjustment in the question, where you have contingent liabilities which you need to disclose. So they have been asking on something like bills discounted. Okay, so if there is a bill discounted, it is a contingent liability, because if the customer does not pay, I have to pay. So you will show claims against company not acknowledged as debt. Somebody has filed a case, I am not acknowledging that amount. Guarantees, if I have given a guarantee on behalf of a third party, other money for which the company is contingently liable. I gave an example of bill discounted. There is an account receivable. The account receivable has given me bills receivable. So it's a bills receivable. This I have discounted with the bank. If the customer does not pay to the bank, I have to pay to the bank. In that case, it is a contingent liability. The amount of dividends proposed to be distributed to equity and preference shareholders for the period and the related amount per share shall be disclosed separately. Here basically it means dividends which have been proposed. We will not recognize, but we will disclose. Right. So that is, then this is a regulatory information, recent amendments, 2 years back this amendment has come into. I don't expect a full-fledged question on this, but again, if there is an MCQ or something, you can read through it once. Title deeds of immovable property not held in the name of company. So if there is any title deed of immovable property which is not held in the name of the company, meaning to say, whose title deeds are not held in the company, should be disclosed in the format. So I have land and building, company owns the land and building, title deed is not in the name of land and building, it is in the name of some other party. So you have to give these disclosures. Okay, then this is always okay, this you don't need to spend extra time. Details of Benami property held, again, I don't think at an intermediate level it will be much relevant. See, even if they ask you 1 or 2 marks is what you will lose. So the thing is, out of these 40 pages, do I spend too much of time to remember all these things? That should not be the case. Ratios have to be disclosed. Some ratios like debt to equity ratio, return on equity, inventory turnover, trade receivable, all of these ratios have to be disclosed. You are not expected to calculate and disclose that in the examination. Okay, so that is it as far as the balance sheet is concerned. Any question? Okay, so what you should do is remember the balance sheet format and read the disclosures once or twice. Okay, don't waste too much of time in just remembering the disclosures. Then we have a statement of P&L format. Now here you have revenue from operations, the main aspect of your sale. Other income, maybe something like an interest income, that will make it total income. Then expenses, cost of material consumed. Now cost of material consumed is given by the formula of opening stock of raw material plus purchases of raw material minus closing stock of raw material will give me cost of raw material consumed. Okay, it will give me cost of raw material consumed. Opening stock plus purchases minus closing stock will give me cost of raw material consumed. This is a golden formula which you need to remember. It will be useful in costing also, right? Then purchases of stock in trade. This is the total purchases. Sometimes the question gives you adjusted purchases, then you have to derive what is the total purchase if information is available. If information is not available, then you will use adjusted purchases. Now, if you use adjusted purchases, this changes in inventory is not required. Okay, but if you don't use adjusted purchases, you have to give changes in inventories of finished goods. Basically, what is the opening stock minus what is the closing stock? What is the opening stock minus what is the closing stock? So you will do opening minus closing and you will put that number here. Work in progress. This is basically any work which is still not yet completed, that you will show here. And stock in trade. So changes of finished goods, work in progress and stock in trade, you will show here separately. Generally what happens is you will do changes in inventory. If work in progress, stock in trade is given separately, you will do the separate calculation, but it will be normally changes in inventory, opening stock minus closing stock. Employee benefit expenses, salaries, gratuity, whatever is related to employee. Finance cost, interest, depreciation and amortization. And if any expense does not fit into this head, everything will be classified under other expenses. So what we should remember? We should remember what is the cost, what are the heads? Cost of material consumed, purchase of stock in trade, changes in inventory of raw material. Raw material is not required because it's already here. So changes in inventories of work in progress, finished goods and stock in trade. Sir, what is the difference between finished goods and stock in trade? Stock in trade is basically I have purchased the stock and I am selling the stock. That is stock in trade. Finished goods means I have purchased the raw material, converted that into finished goods. Okay. Then whatever changes are there, this will be plotted here. Then employee benefit expense, finance cost, depreciation and other expenses. So this will definitely have a schedule here. So once you have total income and total expenses, you get profit before exceptional and extraordinary items, or there could be loss also, right? Loss you can present in brackets. Then exceptional items, items which are ordinary but are of significance, and that will give us profit before extraordinary item. Then you will disclose extraordinary items which are not in the ordinary course of business. Then you will get profit before tax. Then you have tax expense, current and deferred as per accounting standard 22. You will get profit or loss from continuing operation. Generally in the examination, this information is not given in most of the questions. So no need to worry. So here itself you can write profit or loss for the period. Okay, that itself will be the number. Or if discontinued information is there, first you will break it up to continuing operation, then profit from discontinuing operation, tax of discontinuing operation, then you will have profit for the period. Then basic earnings per share and diluted earnings per share. Okay, so there is nothing here, no need to break your head into all of this. So we have seen the format of the financial statements. Now what we'll do, we'll take few questions. One more thing. In this chapter, I don't know why Institute keeps on doing this. All of this, meaning of company, types of company, private company, small company, all of that, including maintenance of books of account, you learn in law, okay, in detail, right? So, because anyways you are writing group 1 together, you will write the 3 papers together, law being your second paper, correct? So, you will be aware of all of these provisions already. So, maybe what you can do is, the chapter related to the company accounts, what is there in your law paper, that you can revise before accounting itself when you're preparing for accounting, so that this aspect gets covered. There is no need to redo the same thing over and over again. Okay. Now, as per the Companies Act, a quick recap: final accounts includes balance sheet, profit and loss account or statement of profit and loss, cash flow, statement of changes in equity if applicable, okay, it's not applicable for you, and notes forming part of the balance sheet. Okay, these are few examples. I'll just have a quick discussion on this before we take a actual question on your preparation of financial statement. The financial statements of financial year of Alpha Limited, as mentioned in the notes to accounts, that during the financial year, 24,000 equity shares of rupees 10 were issued as fully paid bonus share. However, the source from which the bonus shares were issued has not been disclosed. Now, please remember, as we saw that we need to disclose bonus shares, we need to disclose non-cash issue of shares, and we need to disclose buyback of shares for a period of 5 years. Nowhere is it required that you have to disclose the source. So, is such non-disclosure a violation? No, it is not a violation. There is no need to disclose the source of the bonus issue. Okay. Then, management contends that work in progress is not valued since it is difficult to ascertain the same in view of multiple processes involved. They opine that the value of opening and closing work in process would be more or less the same. Accordingly, the management has not separately disclosed work in process in the financial statement. Comment in line with the schedule 3. Okay, so now here what you need to understand is, work in progress is there, but we are saying that opening and closing would be more or less same when you're preparing the profit and loss account. So, opening minus closing, the change in opening balance and closing balance, it will be 0 because work in process is more or less same. Okay, so non-disclosure of such change in the statement of P&L may not amount to violation if they are not material. But do we need to give it in the balance sheet? Yes, we need to give a disclosure in the balance sheet. Futura Limited has following items under reserves in surplus. These 3 items. Company had an accumulated loss of 250 lakhs on the same day, which it has disclosed under the head statement of profit and loss as an asset in the balance sheet. So, what you have to understand is, debit balance, if there is in P&L account, you will show it as a negative number under reserves in surplus. Any negative balance of P&L, even if it exceeds the reserves and surplus, should be shown as a negative number and should not be shown on the asset side, because debit balance in profit and loss is not an asset. Okay, so this treatment is incorrect. Sumedha Limited took a loan from bank of 10 lakhs to be settled in 5 years, 10 equal half-yearly installments with interest. First installment is due on 30th of September of rupees 1 lakh. Determine how the loan will be classified in the preparation of financial statement of Sumedha Limited for the year ended 31st March of year 1. So, we are on 31st March of year 1. First installment is payable on 30th of September of year 1, and second installment is paid on 31st of March of year 2 along with whatever is the interest, right? So, what you pay on 30th September and 31st March, that is 1 lakh into 2 lakhs. This 2 lakhs will be shown under current. Okay, that is current maturity of long-term debt under the heading short-term borrowings, whereas the balance 8 lakhs will be shown under non-current, that is long-term borrowings. Right? Okay. So this we have seen. Dividends we'll do it subsequently after we finish the financial statements. And if you want any specific question of this to be solved, or if you want access to the videos of that solution, please let me know. I'll give it separately so that you can have a relook at it on how to approach. Right now, assume this is a typical question in the examination if it is asked, right? And we'll also take an examination question so to understand how to break down in the real examination scenario. Okay. The following is the trial balance of Omega Limited as on 31st March of year 2. Land at cost, plant and machinery at cost, trade receivables, inventories 31st March of year 2. We are preparing on 31st March of year 2. This is what? This is closing inventory. If you get closing inventory in the trial balance, what it means is it has been adjusted already. Means the inventory adjustment has already been given, and the purchases that you see here is after adjusting the closing and opening inventory. That is why it's called adjusted purchases. Your factory expenses, administration expenses, selling expenses, debenture interest, interim dividend paid. Dividend paid will not come in your P&L account. It will come in your balance sheet as an appropriation of profit. Okay. Equity share capital of 10 each 300, 10% debentures 200, general reserve 130, P&L account 72, securities premium 40, sales 700, trade payables 52, provision for depreciation for this. For land, there is no depreciation. Suspense account 4. So you have to see what is the suspense account, right? Now, in this also, what you need to understand is they have given us 10% depreciation. The moment you read this, you have to see, is there any interest expense given here? Interest expense is not given here, which means interest expense has to be provided for. Now, sir, when should we assume? Have we issued on mid of the year, beginning of the year, end of the year? Give an appropriate note and write the answer. The authorized share capital of the company is 40,000 shares of rupees 10 each. So here they have issued 30,000 shares of 10 each. They have 40,000 authorized. So we will disclose authorized separately. Company on the advice of independent valuer wish to revalue the land at 360. Can we revalue the land? Yes or no? Can we revalue the land?
It's 11 o'clock.
Why no? There is no provision that we cannot revalue land, right? Okay, so revaluation of land is allowed. For the entire land, you can revalue. Declare final dividend of 10% on 2nd of April of year 2. This declaration has happened subsequent to the closure of the financial statement. So this is a non-adjusting item. You will only do the disclosure. Suspense account of 4,000 represents cash received for the sale of some of the machinery on 1st of April of year 1. Cost of the machinery was 10,000 and the accumulated depreciation thereon being 8,000. So what has happened is we collected 4,000. We sold a land. The land has a book value of 10,000 gross and 8,000 depreciation. So net amount is 2,000. We sold for how much? 4,000. So there is a 2,000 profit. This has to be given as a working note. Okay. Then what you will also do is, while calculating depreciation, you will exclude 10,000 from depreciation. But I think they have already given us the depreciation. No, they have not given depreciation. Let's see. Depreciation is to be provided on plant and machinery at 10% of cost. So what you will do? You will take 770 minus what you have sold, 10,000. On that you will provide 10%. You are required to prepare Omega Limited balance sheet on 31st March and P&L with notes to accounts for the year ended so much. Ignore previous year's figures and taxation. Okay. Now, what you will do? See, this much you can fit in a page. So first you will prepare balance sheet ka format. Then you will prepare P&L ka format, right? And then we will have notes to account. Now we will see for which all items we need to give notes to accounts and for which all item it is not needed. Okay. As I told you, share capital reserves and surplus mandatory. You have to give. No choice. Okay. Then long-term borrowings. Here they have given us 10% debentures. This is not directly given as long-term borrowing. So for this also you can prepare a note. Then current liabilities, trade payables. Trade payables is directly given here. So for this, note is not required because trade payable is directly given to us. Okay. So now what we will do, as we are doing in an examination, we'll start from the items given. Equity share capital of 10 each. And here we have the authorized share capital of company 40,000. So what we will do, in the balance sheet, you will come to equity and liability side, share capital, note number 1. So go to note number 1. In note number 1, you will write authorized 40,000 of 10 each, issued, subscribed, called up and paid up 30,000 into 10, 300. This 300 immediately come and plot over here. Okay, then this is done, single tick. Give a small tick, okay, give a small tick, pencil, it is okay, they will not harm you. 10% debentures 200. This is what? This is a long-term borrowing. Okay. Now this 10%, there is no adjustment given. So what you can make a note here separately is that you have to provide 10% interest because you need to provide interest for debentures. If you don't do this, you will forget. So, oh, they have given here, no, debenture interest 20 is given here. So I don't need to make an adjustment. My bad. Debenture interest of 20 is given, 200 into 10% is 20. So I don't need to provide separately. Okay. But if this was not 20, this was only 10, for 10 I had to provide separately. Okay. So long-term debentures, long-term borrowings 200. Long-term borrowings 200. Okay. Then general reserve 130. Where we will take this? We will take it to the reserves and surplus schedule. Profit and loss account 72. This represents opening balance. And whatever profit we get in the current year, we will take it from the P&L account. Securities premium also will go to reserves and surplus. So these three items will go to reserves and surplus. Go to reserves and surplus schedule. Securities premium, general reserve, and P&L opening balance. Okay. Don't close reserves and surplus till the time you finish up the P&L. Then this is done. Sales. So from here, sales will go to income statement, statement of P&L, revenue from operations. Directly you can take 700. So this part is also done. Trade payables 52, current liabilities. Trade payables 52, current liabilities, no need of a separate schedule. If there are more than one, things that you need to present, then you may prepare a schedule and do it. Provision for depreciation is related to fixed asset. We will come to it separately. So this is done. Suspense account, we need to prepare a working note for this. Okay. So this is the part done. Now coming to land 220. For land there is an adjustment 360. So what they are saying, land should be valued at 360. Now because you have land and plant and machinery separately, for property, plant and equipment, here you will prepare a schedule. That schedule will capture land balance, which is 220 plus 140 also you can do and show it as 360. This 140 represents revaluation reserves. And plant and machinery, opening gross block was 770. That is given in the question. Opening gross block was 770. Then we sold 10. So we are left with 760. We are left with 760. And depreciation has to be provided at 10%. So 760 into 10%, depreciation is 76. This depreciation, please remember, you will have to plot it here, 76, and it has to be adjusted in the depreciation section. Now, in the question, they have given us opening provision for depreciation. How much is this? 172. On this, I have to add 76 of depreciation for the current period minus depreciation on assets sold is 8,000. So you will reduce 8. So 172 plus 76 minus 8. 172 plus 76 minus 8, 240. So 760 minus 240, you get 520. So the total amount is 360 plus 520, 880. This 880, you will come and you will plot it in the property, plant and equipment section. So what you have to do here carefully is take the gross block plus purchases minus sales, accumulated depreciation plus current year depreciation minus sell minus adjustment for sold. Okay, this is how you have to do, and the net amount will be presented here. Are we clear on how to handle depreciation on property, plant and equipment in this question? It is more about how do you do the workings. Okay, sir, I don't want to do the workings here, it is clumsy. Can I do it as a separate working note? You can do it. In a separate working note, you can calculate two things: profit on sale of machinery and depreciation. You can do it separately and then you can show it in the schedule. Up to you. Okay. Then plant and machinery we did. Now there is a sale of plant and machinery. Sale on plant and machinery, we calculated that there is a 2000 of profit. 10,000 minus 8,000, 2,000 of carrying amount, 4,000 of suspense account. 4,000 of suspense account, you have received the money. 2,000 is the profit that we have to record. So this 4,000 will be knocked off. Out of this 4,000, 2,000 will be knocked off against PPE, 10 minus 8, and 2,000 will be shown as profit. Where? Other income. So go to other income. Profit on sale of machinery, 2,000. Okay. So that you will do. So with this is also done, this is also done. Then you have trade receivable 96, directly you can show it in the balance sheet under current asset. Inventories 86, directly you can show. Bank balance under current asset you can show. Adjusted purchases 320. So this, if you see here, 320 has been written. Sir, why did we not write total purchases? Because we don't have opening stock information. Because we do not have opening stock information, we cannot adjust it. Sir, what if opening stock information is given? Then you have to see adjusted purchases is equal to opening stock plus purchases minus closing stock. Okay. If you have the information of opening stock and closing stock, you can derive the purchases and show here purchases. This is adjusted. If this is not adjusted, you will have change in inventory to be shown separately. Okay. So that is done. Purchase is also done. Factory expenses will be shown under other expenses. Administrative expenses will be shown under other expenses. Selling expenses will be shown under other expenses. Debenture interest will be shown under finance cost. Interim dividend paid will be subtracted in the reserves and surplus. In the reserves and surplus, opening balance of profit and loss, profit for the period, this comes from P&L, and interim dividend will be subtracted here. So when you complete the P&L, whatever is the profit here, 166, after tax, this 166 gets added to this number, and you deduct the P&L, the interim dividend, and this is the closing balance. This will go to the balance sheet. Now here we also need to add revaluation reserve because there is a revaluation of the plant. So when you revalue the plant, the land portion, the adjustment, here wish to revalue the land. First adjustment PPE, second adjustment revaluation reserve. Okay. Declared a final dividend of 10%. This is not required. This just needs to be disclosed. Suspense account. Again adjustment. Two adjustment. One PPE. Second P&L. Depreciation is to be provided at 10%. Balance sheet P&L. So if you track it this way, there is very less chance that you will miss out something in the examination. Okay. So you have considered all the items and then you can do the totalings. Don't do calculation mistakes. That is one. And if at all you get a difference in the balance sheet, sometimes it happens, you tend to get a difference in the balance sheet. If the difference is, I'm just giving you a technique. For example, just for example, here it is 1028 and here it is 1082 totaling. So the difference, if you see, 1082 minus 1028, the difference is 54. This 54, if it is divisible by 9, there is a number switching problem. So whenever you get a difference like 270, 1080, which is divisible by 9, then you have done a mistake in switching the numbers. For example, this is 86, right? Say for example, instead of 86 you wrote 68. Instead of 86 you wrote 68. So 86 minus 68, if I have to do, it is 18. 18 is divisible by 9. So any difference in the balance sheet, if it is divisible by 9, you have done a number switching problem. Okay, that is one thing you have to keep in mind, which will help you to identify it properly. If, or one more way, if it is not divisible by 9, divide the number by 2 and see, have you posted it on the debit side instead of credit side. That's it. Okay, if not, if you are not able to trace after this also, leave it, come back to it after you have completed the remaining questions, because total of balance sheet generally does not carry marks. Okay, what carries marks is they will see, so examiner will see 1 item, 2 item, 3 item, 4 item, 2 marks here. Okay, 2 marks here. 1, 2, 3, 4, 2 marks here, 4. Then 1, 2, 3, 4, 5, 6, 6 items, 3 marks here. This will be 1 mark. This will be 1 mark. Do we need to write in the same order? Not required. You can write in any order you want to. Till the time, as an examiner, I will see whether this 530 is there or not. Then this will be half mark. This will be half mark. This will be 1 mark. Half mark, 1 mark. Something like this. Okay. This will be the breakup that you have to see. Are we clear with the approach we should be taking in solving the questions of P&L in the examination? Others, everyone, I want you to have confidence or comfort in this particular topic, because can be highly scoring. Can really be highly scoring, and I'm telling you, this is how the breakup will happen. So even if you are able to do some, half correct balance sheet, half correct P&L, some of the schedules and all of that, out of 14 marks, we should target at least 10 to 12 marks. This is one chapter where we should be, looking at it properly. Okay, so I'm just pulling out the question. First, what we'll do is we'll do a question from the latest examination, and then we'll do a question. We'll look at a question from a previous examination. Okay. Now, because we will not have 20 marks question, so even if you look at a 20 marks question and you feel that, sir, it's very long question, generally I would say that long questions will not be tested. Okay, so this is very simple question, similar to what we have done just now. If you get this type of question, you should consider that yes, it is very lucky. And same question, just now what we did, this is the same question. You have land at cost, machinery at cost, debtors, closing stock, bank, adjusted purchase, factory, nothing is different. Equity, 10% debenture, general reserve, profit and loss account, securities premium, sales, creditors, provision for depreciation, same. Selling expense, debenture, interest. Now 14 is here, debenture 135. Okay, so 135 into 10%, 14. So we'll assume that everything has been provided. It should be actually 13.5 only. On 31st March, the company issued bonus shares to the shareholders on 1:2 basis. 1 equity share issued as bonus for every 2 equity shares held. No entry relating to this has been made. All of you are aware of how to handle bonus issues? Are all of you aware of how to handle bonus issue? This is an additional adjustment. Okay. If not, there is a bonus issue video on YouTube of mine, or just have a look at how to account for bonus issue, because earlier it was a part of inter syllabus, now it is a part of foundation syllabus. So those of you who came from older foundation syllabus and are writing inter now, okay, after a delay, please have a look at how to handle bonus issue. Okay, 1 for every 2 equity shares held means equity shares of 10 each is 200. So 200 divided by 10 if I do, I get 20,000 equity shares. Out of this 20,000 equity shares, we are saying for every 2 we will give 1. So divide by 2, multiply by 1, we will give 10,000 new shares. 10,000 new shares of 10, that is 1 lakh. Okay, so this is one adjustment. Now when you do this adjustment, what you have to do is you have to pull out the amount first. You can do it from securities premium if it is realized in cash. Then you have general reserve. If it is not sufficient, you can go to P&L. Okay. Then authorized share capital of companies 35,000 equity shares. 20 plus 10, it will take care. No need to worry. 30. Sometimes if the authorized share capital is not sufficient, you can assume that authorized share capital has been increased. Company on the advice of independent valuer revalued land. We did the adjustment already. Directors declared a dividend of 10% of 5% on 5th April and also transferred profit at 10% to general reserve. Means from P&L account 10% has been transferred to general reserve. Suspense account represents 3,000 cash receipt for sale of machinery. Same thing we have done. Depreciation is 10%. Provision for income tax 30%. This was not there. So now what you have to do? After profit before tax, we have to provide for 30% profit after tax, 30% tax expense, and then calculate the profit. Okay, so now if you see, we'll just come to the working notes. Securities premium account 27 is there. We have utilized 27 for bonus issue, and general reserve 73 has been utilized for bonus issue. So the order is generally securities premium, then general reserve, then P&L. If you have, let us say, capital redemption reserve, you will use that first. So capital redemption reserve, securities premium, general reserve, P&L in this order. P&L you will touch last. So we had to issue, in this case, 1 lakh. We needed 1 lakh. 1 lakh is nothing but 100. Out of this 100, first I will touch securities premium 27. Balance what is not sufficient, I will take it from general reserve. Even after that I don't have a balance, then I will take from P&L. Okay, so that is the first thing. So share capital, if you see, you have 35,000, 20,000 is already there, 10,000 bonus shares issued during the year. So this has been done. Okay. Securities premium opening balance was 27, utilized for bonus issue 27, closing balance is 0. Okay. General reserve utilized 73, transferred from P&L 10%, 7.07. So this cannot be completed till the time you complete P&L. So P&L here is 70.70. So the 70.70 of this 10% you have to transfer to general reserve. Don't do that adjustment in P&L. That adjustment has to be done in reserves and surplus only. Okay. Then
It's 11:30.
this is done. Then P&L opening balance, profit for the period, transfer to general reserve, closing balance. So basically you reduce 7.07 here and you move that 7.07 there. See this adjustment. As I tell you, right? Each adjustment. Transfer 10% to general reserve. It has two adjustments. One, reduce from the P&L balance. Second, add it to the general reserve. Second is add it to the general reserve. Okay. Then valuation we have already done. This also we have done. This also we have done. Provision is required at 30%. So do we take deferred taxes and all? Unless the question gives us information, don't get into that. Directly take 101, whatever is the balance, multiplied by 30%, 30.3. This current tax, because it is given as an adjustment, once you will show here, second you will show under your current liabilities. Here 30.3 short-term provisions for provision for taxation. Okay. Then apart from this, is there anything new? There is nothing new apart from this. All the things we have already discussed, and you will be able to handle this. Right. Now, scoring part, 14 marks. Right. I will give you a breakup of how scoring or how scores will be given to you. 1, 2, 3, 4, 5, 6, 7, 8. So this will be about 3 marks or 4 marks, 3 to 4 marks. P&L 1, 2, 3, 4, 5, 6, 7, 8. This will be 3 marks. So 4 plus 3, 7. This will be 1 mark. 8, 9, 10, 11, 11 and a half. Here maybe 1 more mark. 12, 12, maybe 1 marks extra here and there for some other calculation. Okay. So you can score, if you are able to do this in the examination as it is, you will be able to score 12 to 14 marks easily without any problem, without any challenge. Okay. Now the next question what I wanted to discuss was a longer question, actually 20 marks question. Okay. Now 20 marks will not be tested, of course. So what they will do is they will reduce the adjustment. This has 11 adjustment. Well, very long question. What they will do is they will reduce the number of adjustments and they will give that in the examination. Alright. So let us see. The following is the trial balance of Falgun Limited as on 31st March of 23. Equity share capital 100 each. Preference share capital 100 each. General reserve 285. Debentures. So moment you see 10% debentures, you have to think, is interest provided. Securities premium account, land at cost, plant and machinery, furniture. All of these are your PPE items. Provision for depreciation, plant and machinery, provision for depreciation, furniture, different. Separately they have given. Trade receivable, trade payable, cash in hand, cash in bank. Bank overdraft from nationalized bank secured by hypothecation of stock. So this is your secured loan. So you have to show it separately that it is secured. And you also have to say it is secured by hypothecation of stock in the balance sheet. 6% secured loan from State Finance Corporation, repayable after 3 years, long-term borrowing. Unclaimed dividend, 23,000 current liability. Loan from director, short-term, 1 lakh, current liabilities, because it is director from related parties, separate disclosure. Adjusted purchases, 2,25,000. Closing stock, 1,12,000. Sales, 846. This is your revenue. Carriage inward, 17,200. Now here, there is no need to segregate between direct and indirect. This will go under other expenses. Miscellaneous expenses, other expenses. Selling and distribution, other expenses. Depreciation, 1,80,000. Directly you can show. Salaries, your employee benefit expenses. Director fees, traveling expenses, 50,000 for foreign tour, 1,30,000. So 50,000 what is incurred for, if it is incurred in foreign currency, you need to give a separate disclosure. P&L account 40,000, office expenses 28,000, rent received 24,000. This rent received will be your other income. Okay. Then so many adjustment. Of course, again, now you are lucky you will not have such long adjustments in the examination, right? So authorized share capital is 20,000 of 100 and 10,000 of 100. Okay. Equity shares include 2,500 equity shares issued for consideration other than cash. This you have to disclose separately. Company has land professionally valued and decides to include in the balance sheet at 8,50,000. What was there? 7 lakh. Means two adjustment. Increase the value of land, increase the value of revaluation reserve. It is proposed to capitalize part of undistributed profit by making bonus issue to the shareholders by allocating 1 equity share of rupees 100 each for every 5 share held. Okay. Now they have said it is proposed. Now you can make an assumption that bonus issue has already been made and make the adjustment, or you can assume that bonus issue has not been made. It is just in the proposal stage and nothing needs to be done. You have to read very carefully. Okay. Proposed means not yet approved. The company has not yet made. Trade receivable of 46,000 are due for 6 months. There is no doubtful amount. So, outstanding for more than 6 months considered good. 46,000 you have to disclose. Depreciation include depreciation of 1,10,000 on plant and machinery and 70,000 on furniture. Breakup you need to do. Cash includes 50,000 Desire Bank Limited, which is not a scheduled bank. Miscellaneous expense included 5,000 being paid fees to auditor. So audit fee has to be disclosed separately. Bills receivable 35,000 has been discounted. If you have discounted any bills receivable, this becomes your contingent liability. Balance of secured loan is inclusive of 36,000 for interest accrued but not due. So this balance, this balance includes interest accrued but not due. So out of this you have to see how much is interest accrued and not due. That has to be shown separately. Directors declared final dividend on 6th of April, not required. 6th of April 23, we are preparing as on 31st March, so no need to worry. Then ignore taxation, no need to provide for taxation. Interest on debentures for the year is outstanding as on 31st March. Debenture, so 10% debenture, it is outstanding. So whatever is there, 2 lakhs into 10%, 20,000 is outstanding. You are required to prepare balance sheet on 31st March, statement of P&L with notes to accounts for 31st March 23 as per Schedule 3 of Companies Act. Ignore previous year and ignore taxation. All working should form part of your answer. Now if you see, here they have not done any rounding off. Okay, so you have to, of course, the amount is also not high, but generally you will feel whatever amount is given in the trial balance, accordingly you can prepare the financial statement. Now here, a tricky part when we come to actually the schedules, authorized and this is done. Here we have disclosed 2,500 shares have been issued for other than consideration other than cash. For bonus issue, what they have given is Bonus is in proposal state, no adjustment has been made. Okay. If it was approved, if it was issued, then we would have made the adjustment. Alright. Then reserves and surplus securities premium from the trial balance, revaluation reserve for the land which has been revalued, general reserve 285, P&L opening balance, profit for the year. This is the total number. Long-term borrowings, debentures 10% of 100 each, 2000. This 10% debenture interest is outstanding. That has to be provided. 6% loan from State Finance Corporation, repayable after 3 years, 450. 450 is the loan minus 36,000 is interest. So loan component is only 4,14,000. This 36,000 you will show under current. Interest accrued but not due, 36,000. Interest on debenture, unclaimed dividend, current liabilities. Okay. Then others, bank overdraft, nationalized bank secured by hypothecation of stock, 2 lakhs. So secured term loan, other secured. Short-term borrowing, loan from directors, disclosed separately. PPE and all, this is a simple calculation we have already done. Cash at bank with scheduled bank, 2,50,000, with others, 55,000. So you have to give a breakup of what is there with scheduled bank and what is there with other banks. Okay, that is done. Then coming to income statement. Here they have combined cost of material consumed and cost of purchases because we don't have the full breakup. Cost of purchases and carriage inward, they have done it together. Okay, so one is cost of material consumed and carriage inward, but to be frank, carriage inward will be a part of your raw material purchases. So you can say cost of purchases directly on the adjusted basis. Now always remember, as I told you, if adjusted purchases have not been given, if only purchases has been given and trial balance has opening stock, then here you will have one more item called changes in inventory that you need to present in the financial statement. Alright. So here I think I took at other expenses. Carriage inward is a part of purchases and it has been added to the cost of purchases. Okay, then changes in inventory is not there. Employee benefit is directly done. Finance cost for your interest on debentures. Not only that, I don't know why they have not considered this. They have taken only 20,000, which is incorrect. Finance cost, you should so the question does not have information related to expenses. So they have not given breakup of, here the problem in this question is, they have not given a breakup of this 36,000 of interest is there. Where is this interest included in the trial balance? It is not given. So you can assume if you want to that it is a part of, but you cannot assume just like that. So because information is not given, they have just taken your debenture interest, but then they may also include if there is interest on your loan from State Finance Corporation, if there is interest on bank overdraft, all of that you have to present it under finance cost. Okay, so here this will include interest on SFC and bank OD if information is available. If it is not available, whatever is available you will show that. Depreciation is the same thing what we have done, other expenses and total expenses. Okay, so apart from this there is nothing which you need to dwell on, but yes, audit fee has to be separately disclosed, that we have already discussed. Depreciation they have directly given, you can directly use the number and you can put it on. Okay, alright. Now what to do? Practice this question, and if you have way too many adjustments and if you feel that this will take longer time than what we have initially budgeted, you can take it subsequently also. Okay, you can do it towards the end also, but my suggestion would be at least make an attempt to do a question which comes from where you're required to prepare P&L, because even if you make few mistakes in disclosures and all of that, 14 to 16 marks out of 20 marks is possible. But yes, cut off time for us 14 marks question, we will not spend more than 30 minutes. This should be my cutoff time. Within 30 minutes, whatever I could do, unless you are almost at the end of finishing the question, not more than this, what you should be spending time on. Now, in exam, in the reading time, quickly scan through the adjustment. Okay, in the reading time, quickly scan through the adjustment so that you have the confidence that yes, I will be able to attempt this particular question. Is it clear? Yes. Now here, as far as the approach is concerned, I have discussed all the approaches. As far as the way to present in the examination is concerned, I have given you all the tips and tricks. If I solve questions, you will find it easier. I want you to go back and take any 2 or 3 random questions from the study material, or take the, you can use this compiler and take questions from here. You have subsequent questions also. Okay, so if you want, you can maybe take a 10-mark question here. Again, simple adjustment. Equity shares issued other than cash. Trade receivables 55,000 due for more than 6 months. Cost of building is 550. This is 625. Loan is secured by hypothecation of plant and machinery, inclusive of 10,000 of interest. Similar adjustment. When was this asked? 2019. Similar thing was again asked in 2023. Okay. Then balance includes this, which is not a scheduled bank. That's it. So read through the adjustments. At least read through all the adjustments given in the study material, or you can maybe further go down and see these adjustments. Okay. You'll not find anything very tricky or anything very difficult. That is my guarantee. So go through all the adjustments. Even if you don't solve all the questions, read all the adjustments and see whether you can correctly handle the adjustments or not. But at least practice 2 to 3 questions from the study material, or from the test your knowledge question, or from the past exam question on your own, and see how much time do you take to solve that particular question. This is one chapter where you don't need to practice hundreds of questions. 3 or 4 good questions if you are able to practice, it is more than sufficient. Yes, read all the adjustments in the study material and see whether you can handle those adjustments or not. All clear? Any specific area you want me to cover in preparation of financial statement? Sir, these type of adjustments we find it difficult. If you have anything like that, please let me know. No adjustments, no doubts. Surprising. Okay, so something like this. Very long question. Illustration 4. Okay, just practice it once. Other than that, there is nothing you can do. If at all a long question comes in the examination, you will not have a question with 18 things. Final dividend declared after the balance sheet date. See, what happens is generally final dividend is declared after the balance sheet date. Okay, so that if it is declared after the balance sheet date, then it will be shown in the notes to account. If there is a previous period final dividend declared in the current period, then that you will adjust in the reserves and surplus. So you have to see what is the date of final dividend. If it is after the financial year end, you will show in the notes. If it is in the same financial year you have declared final dividend for the previous period, then you will do the adjustment. Okay, see, simple. So if you see all the adjustments, not there. This was there in the exam question. This was there in the exam question. Suspense account, same question. Consideration other than cash. Revalued the land. So simple. By the time you read the adjustments, you know, yes, I can solve this question. You should go ahead and solve the question. The practice has to happen from your end. Okay, I can solve hundreds of questions. There is a question. Can you tell me the question number? See, dividend distribution tax is not relevant now. Okay, what you have said is rightly correct. But what happens is sometimes institute has this habit of taking old questions and giving it. So if at all you see a dividend distribution tax, reduce it from the retained earnings. Okay, and from specific for specific types of payment, tax may be payable. Okay, it may come. They may ask. It is not that they cannot ask. It is not applicable currently as per the Income Tax Act. Subsequently, they may make it applicable again. So, if at all you see terms like dividend distribution tax, you will reduce from retained earnings or P&L balance. Okay, so I'll just see if something is to be covered. Again, on 2nd April of year 1, we are preparing financial statement as on 31st March of year 1. So, no need to disclose. Unclaimed dividend, current liability. Advance tax, you will reduce it from the provision for taxation and present it on a net basis. Or advance tax separately under current asset and provision for income tax separately under liability. Bill discounted but not yet matured. This is a contingent liability. Contingent liability for bill discounted, not matured. Okay, so that is one adjustment you have to give. So similar questions, again, is a contingent liability. Okay. Read all the adjustments of the study material. Finish the compiler that has been provided to you. That is more than sufficient. You don't need to worry beyond that as far as this chapter is concerned. But yes, if a question comes, either a 10-mark question or a 14-mark question, 8 to 10 mark, 12 to 14 mark should be our target. So if there are shares called up and which are not paid, what you have to do is you have to show it as calls in arrears and you have to reduce it. So here what has happened is question number 10, calls in arrears 15,000. Okay, so what happens is called up means the company has asked the shareholders to pay the money, but to the extent of 15,000 we have not received. So what we will do is from this 80,000 we will reduce this 15,000 as calls in arrears. So in the financial statements, if at all there is a share which is called up but not paid, in the financial statement what you will do is, after you calculated the paid up value, we will say calls in arrears, what is the amount? 15,000 and present the net amount as 79,85,000 in this particular case. Jasmine, is it clear? Okay, and this table, no, if you find this is too much to do, what you can also do is you can say gross block or cost minus accumulated depreciation, land, building, furniture and fitting. So you will save some time. You don't need to write depreciation again and again. 3 times you don't need to write. Just by writing once it is sufficient. That also can be done. Till the time your information is there in the answer, you will get marks for it. You may present in tabular format, horizontal format, this format, that format, up to you, but it has to be neatly presented. An examiner must be able to figure out that yes, you have done the question properly. Okay, so this is with respect to financial statements. Now, another important part of this particular chapter is distributable profit and dividends. Okay, so normally what happens, a company earns money, shareholders have invested amount into the company, they expect something in return. Okay, so whatever profits the company has earned, something has to be distributed. Something which is distributed to the shareholders is called dividend. So a dividend is a distribution of divisible profit of a company among the members. That is what is called a dividend, right? Now, if a dividend is distributed, or if a part of profit is distributed, how do we account for it? From the P&L balance under reserves and surplus, you will show the dividend which has been paid. Always remember, if there are preference shares, first we have to pay dividends, or first we have to account for dividends towards preference shareholders, and then we have to account for dividends of equity shareholders. While paying dividends, we have to comply with the provisions of the Companies Act, which says no dividend should be declared or paid by a company except out of the profits of the company for that year arrived at after providing for depreciation. So you can make or you can pay dividend from profits for the financial year arrived at after depreciation, out of profits for any previous financial year arrived at after providing for depreciation, or both. So means what? I can pay dividends from the current year P&L balance or previous period P&L balance. From whatever profit is there, from that accumulated profit, I can pay dividends. So this is first thing. Then, if government has provided some money, then if the government has provided some money, that money can also be used. A dividend should not be declared or paid from its reserves other than free reserves. Means I cannot pay dividend out of securities premium account. I cannot pay dividend out of any, let us say, revaluation reserve. I cannot pay dividend out of capital redemption reserve. Those cannot be used to make payment of dividend. Okay. That is the fundamental part of dividend. Then sometimes what happens is, from P&L, the company would have transferred something to general reserve. Okay. Now, P&L balance can be freely used to declare dividend. Even general reserve can be used to declare dividend. But if I want to use general reserve balance or any reserve balance to declare dividend, then I have to comply with certain conditions. So the fundamental rule is, if there is a balance in P&L, I can use the balance in P&L and declare dividend, no problem. Okay, after providing for whatever depreciation and all that is required. But if I don't have sufficient balance in P&L, or if there is a loss in P&L, accumulated losses in P&L, but I have something called a general reserve which I had created out of my profits in the past year, then what can be done is, by complying with certain conditions, we can use general reserve balance to declare the dividends. So what are those conditions? First, the rate of dividend should not exceed the average of the rates at which dividend was declared in the 3 years immediately preceding that year. So for example, we are in, let us say, 24-25. We are in 24-25. If I have to declare dividends in 24-25, I can use P&L balance. Perfect, no problem. I don't have sufficient balance in P&L. If I don't have sufficient balance in P&L, then in that case, I can use past reserves which I have transferred to the reserves account from P&L. Now, how do I use it? I have to see 3 years average. So, 23-24, 22-23, 21-22. What is the average that I have to consider? Okay. Now, using this average, whatever the average number I get, my dividend declaration in 24-25 should not be greater than the average of these 3 years. So for example, if it is 8%, 10% and 12%, average becomes 10%. That is total of these divided by 3. So 10% is the maximum dividend I can declare in the current period. If you have declared only in 2 years, consider average of 2 years. If you have declared only in 1 year, consider of that 1 year. That is first condition. Second, amount to be drawn from such accumulated profit should not exceed 1/10 of paid up share capital and free reserves as per the latest audited financial statement. So we are in the current year, 24-25. For this condition, you have to take 31st March of 24. Whatever amount of previous accumulated profit you want to use, it should not exceed 1/10 of paid up share capital, that is equity share capital and preference share capital, plus free reserves, means P&L balance, general reserve. Okay, it should not exceed more than 1/10. So maximum amount that I can draw is 1/10. Then amount drawn should be first utilized to set off the losses incurred in the financial year in which dividend is declared before any dividend in respect of equity shares is declared. So whatever amount I have withdrawn, if I have made losses in the current period, first I should offset that losses, and only if balance is left, I can pay. For example, if I have withdrawn 10,000 from reserves, current period loss is 4,000. So 10,000 minus 4,000, only 6,000 I can declare. The balance of reserves after such withdrawal should not fall below 15% of its paid up share capital as appearing in the latest audited financial statement. So from general reserve, I have withdrawn 10,000. This general reserve after withdrawal should not be less than 15% of paid up share capital, and this amount should be maintained. So reserves should never be less than 15% of paid up share capital. No company should declare dividend unless carried over previous losses and depreciation not provided in previous year are set off against the profit of the company of the current year. The loss or depreciation, whichever is less in previous year, is set off against the profit of the company for the year for which dividend is declared or paid. So what this basically means is, if you have carry forward losses or depreciation which has not even been provided for, then you will have to set off that against the current year loss or depreciation. Whatever is the amount there, that has to be set off. Only then you can declare the dividend. Right? Now, let us look at this question. Due to inadequacy of profits during the year ended 31st March, XYZ Limited proposes to declare 10% dividend out of general reserves. From the following particulars, ascertain the amount that can be utilized from general reserves according to the rules. They have given 1750 preference shares, 8 lakhs equity shares, 80 lakhs, general reserve opening balance. This is ending balance. Capital reserves opening balance, revaluation reserve opening balance. Out of this only this is free. These two are not free. Net profit for the year ended 3 lakhs. Average rate of dividend is 12%. Now I have to declare 12% dividend. Okay. Now can I make that dividend? Can I declare that dividend? Now how do we check? First, you want to declare 10% dividend out of general reserve. So equity shares 80 lakhs. 10% dividend will make it 8 lakhs. 8 lakhs is what I have to declare. I think my video is gone. So I'll just turn off my video. There is the phone battery is dead. Okay, so that's why the video is off. Okay, so I think just the screen should be sufficient. 8 lakhs is what I have to declare. How much profit have I made? 3 lakhs. First, out of this 3 lakhs, I have to pay preference shareholders 9%. So 17 lakh 50,000 into 9%. First, I have to pay to the preference shareholders. So out of this 3 lakhs, I have to pay preference dividend of 1,57,500. So I have only 1,42,500. I want to pay 8 lakhs. Do I have sufficient amount? No. So first is 657,500 is the shortfall. Now this 657,500 has to be withdrawn from the general reserve. Now we have to comply with the condition. What is the first condition? The first condition is the rate has to be lower than the, or maximum should be the average rate. So 10% satisfied. Average is 12%. Second, maximum amount that can be drawn should not exceed 10% of paid up capital plus free reserve. So paid up capital 1750, 80 lakhs and free reserves 25 lakhs. 80 lakhs, 1750, 25 lakhs. Maximum amount is 10% of this. I have total of this into 10%, which is 12,25,000. How much do I need? 6,57,000. Can I withdraw? Yes, I can withdraw. Then balance of reserves after withdrawal, that is, I have 25 lakh of general reserve. I have to withdraw 657. So 25 lakhs minus 6.57, it is 1842. Should not be less than 15% of paid up capital. What is the paid up capital? 17 plus 80. 15% is 1462. The balance should be higher than 1462. Is it satisfied? Yes. Since all these three conditions are satisfied, we can withdraw and declare the dividend. Okay. Now, there is a similar question in an examination of May 24, I think. 4-mark question. 4-mark question. I'll open it. Yeah. Following information are available in respect of Z Limited as on 31st March of 24. Equity 500 lakhs, general reserve 100 lakhs, loss for the year ending 31st March of 24, 5 lakhs. Due to the absence of profit during the year, the management recommends to declare dividend of 10% out of general reserve. Rates of last 5 years are given below. As an accountant, you are required to suggest whether the recommendation of the management is justified, then suggest the rate of dividend. Okay. Now, first condition for dividend is average. Average of how many years? 3 years. So, you have to take previous 3 years, calculate the average, which is 12%. We are declaring 10%, so it is satisfied. Then, dividend that you have to withdraw, the amount that has to be withdrawn from the general reserve should be less than 10% of paid up share capital plus reserves and surplus, right? 10% of paid up share capital and reserves and surplus. And also you have to ensure that if at all there are any losses, that also has to be absorbed. So, paid up share capital is 5 crores. Your reserves and surplus is 1 crore in the question and 5 lakh is the loss. So, after setting off all of this, what is the balance left? Into 10% if you do, you get 59 lakhs 50,000. You need only 50 lakhs. So, this condition is also satisfied. Then, after declaration of dividend, 15% of paid up share capital, that is 5 crores ka 15%, it is 75 lakhs. Now, here if you see, the balance after you withdraw the money is not sufficient. It is less than, how much is the balance? You want to declare 50 lakhs of dividend. If you declare 50 lakhs of dividend, you are left with only 45 lakhs and you need 75 lakhs. So, the condition is not satisfied. Therefore, you cannot, declare a 10% dividend because the condition is not satisfied. So, how much can be utilized? Basically, if you see 10% of paid up share capital is equal to 75 lakhs. 10% of paid up share capital is 75 lakhs. I have 1 crore in general reserve. Out of this 1 crore, losses is 5 lakhs. So I am left with 95 lakhs. Out of this 95 lakhs, maximum I can draw is only 20 lakhs. So the maximum amount that can be utilized is 20 lakhs. So the rate of dividend should be 4%. Okay. Or second conditions, you can alternatively present it as this way also, because both the interpretation has been considered to be appropriate. But maximum dividend is 20 lakhs. Now if you see, it's a long question. To calculate so much, it's a long question, but you are assured of 4 out of 4 marks. And one thing I have what I've observed is, Institute has increased the length of the questions after introduction of MCQs. So, we have to be very, very careful in managing our time in attempting the questions in the examination. All right. This we just now did it. So again, similar question, one more for practice. I was just searching for this. They have inadequacy of profits in the year, and it proposes to declare 10% out of general reserve. From the following, ascertain whether it can be utilized. So I think this, it's a similar one only. So you have equity, shares, general reserve, revaluation reserve, net profit for the year. Average rate is 12%. 5 years they have given, we need to take only 3 years. Amount that can be withdrawn for the reserves is 5 lakhs, is total dividend. Current year profit is 142, so we need 357,500. Okay. First, 10% condition satisfied. Second, that can be withdrawn should not exceed 10% of paid up capital and free reserves. And third criteria is it should not fall below 15% of paid up capital. Correct? So 10% of paid up capital and free reserves is how much? 50 plus 25. That is 10% of 75 lakhs. That is 7,50,000. You cannot draw more than 7,50,000. How much we need? 357. Satisfied. Second, balance after withdrawal should not fall below 15% of paid up capital. How much is paid up capital? 50 lakhs. 15% of this is 7,50,000. Now, what is the balance after withdrawal? 25 lakhs minus 375, 2142. So, this condition is satisfied. Hence, we can declare the dividend as per this rule. Okay. Any questions on this? Did your confidence improve after discussion of all of these questions and approach to this particular chapter, which is generally a lengthy chapter and a lengthy question in the examination? Yes? Yes. Practice 3 to 4 questions independently and see that you are able to solve it. Leave spacing, balance sheet 1 page, profit and loss 1 page, 2 page for schedules, and then working notes. No, even if space is left out, no need to worry. Target, as I told you, 10 to 14 marks in this particular question if it comes in the examination. Okay, sure. Thank you. We'll end today. My phone is also off and not enough time to start another chapter. So we'll conclude here today, and tomorrow we'll start with internal reconstruction. Thank you.